Hey everyone, it's Will back with another video on credit cards, but this time it's all good news. In one of my last videos, I talked about how credit card interest works, how the credit card companies make money off of you. In fact, on a $5,000 balance of credit card debt at 20% APR, you'll be paying $1,000 in interest to these credit card companies every year. One of my other videos talked about how we can reduce that fee, that payment of interest, to $0 by never maintaining a balance, paying off your balance in full every single month so you never pay a dime in interest. That was this one, how credit cards work, the billing cycle and grace period. Today we're going to take it one step further. How can you shift this thing even farther in the same direction so that the credit card companies are actually paying you money? Believe it or not, this is actually pretty easy to do. And I'll show you the details later, but credit card companies have paid me almost $7,000 in 3 years, and I've never paid a dime in interest. What it comes down to is the credit card companies have to compete with each other for your business. They do this by providing you bonuses and rewards. Here's some common ones. This particular card is right now offering $200 cash back as a sign-up bonus as long as you spend $500 on the card within 90 days of opening the account. So you have to charge $500 to this card, but you can pay it off every month. So you never have to pay a dime in interest to take advantage of this award. And you're probably familiar with this type of award, which is a regular routine use cashback award on 1%, 2%, 5% of your regular purchases that you make on anything or maybe in a particular category. For example, this one gives you 3% cashback on dining purchases. So as long as you follow the advice in the other video and stay in your grace period, you can take advantage of these rewards without ever paying a dime in interest. So this is how the credit card companies pay you. Now, of course, they only do this because they hope that you won't have the self-control and you'll actually build up a balance over time and pay interest. But let the other suckers do that. You are going to master your personal finances, pay $0 in interest, flip the scale, and take money from the credit card companies. Here's a few more current credit card offers. Here's an American Express one, which will give you $200 cash back after you spend $1,000 in purchases in the first 3 months. Here's one from Bank of America, which is a $150 bonus, and they also have some cash back on regular routine expenses. Now, check out how much just this alone has made me in the past 3 years. This is from my mint.com account, which I use to track all my expenses and my income. I've filtered my income from the past 3 years for credit card rewards transactions, and you'll see that I've made an average of $1,158 in cash back awards from credit cards in the past 3 years. That's crazy. Now, yes, I've opened a lot of credit cards, and this includes both those sign-up bonuses for $150, $200 for first signing up for the credit card, as well as cash back on my regular purchases that I make on gas and food and groceries and everything else I do in my regular life. Now, you might ask, why did it go down in 2017? Well, that's because in 2017, I shifted this trend into high gear and started taking advantage of credit card offers which give you airfare bonus miles or bonus points that can be used towards airplane tickets. These are all the airplane tickets that I purchased using my bonus miles. My wife and I went on our honeymoon to Rome and Italy for only $932. Now that's still a lot, but normally 2 plane tickets from my home state of Pennsylvania to Rome would cost over $2,300. So I saved $1,300 by using the miles which I was given by the credit card companies for opening credit cards. These domestic flights cost basically nothing. It's just a very small fee when you redeem your miles. And normally for 2 people, for my wife and I, it would cost $600 to $900 for these tickets. Here's a trip I took to Raleigh, North Carolina by myself, which would have normally cost over $300 a ticket. And one to Indianapolis that my wife and I just went on for Christmas. So I got all these miles and points by opening airline credit card companies. For example, the Southwest Airlines credit card, where they offer you 50,000 Southwest points as long as you meet some minimum spend in the first 3 months. I've done the American Airlines card as well as some bank cards like Chase, who also offer points that can be used towards miles. So I've saved over $3,700 on plane tickets in the past, this is actually just 2 years, because I'm using these miles that these credit card companies are giving to me for free. Well, not quite for free. Once you get into the airline mile credit cards, some of these credit cards charge you a small annual fee, $65, $95 or something like that. So I did have to pay $263 in annual fees but it got me this much gain. So between the $3,700 in airfare and the $3,476 in true cash back, I've saved almost $7,000 or earned $7,000 worth of money from these credit card companies, and only paid $263 in annual fees and $0 in interest. Real quick, here's some pictures. Here's a picture of me sitting outside a cafe in Savannah, Georgia. We got there on miles. This is me on the Amalfi Coast in Italy. This is where I went on my honeymoon with my wife, again saving over $1,000 by using these free miles from airlines. And this is my wife and I in Aspen, Colorado this summer. So what do we call this hobby or this trick to getting money from credit cards? One term that's often used on the internet to refer to it is churning, and I'll show you why in a moment. Churning, all these tricks about reaping the rewards of credit card offers, basically come in 3 different levels. The entry level is simply choosing a single good cashback rewards card and using it for all your routine purchases. So you want to be getting that 2% back on groceries, dining. There's a lot of different offers there, but pick one that works for you and start redeeming those rewards for cash back. This can really add up to over $100 a year. If you want to take it a step further, this is when you open new credit cards regularly to earn those cash back sign-up bonuses. Those are those 3 I showed earlier. $200 here, $200 there, $100 here, both you and your spouse. That really starts to add up. Then you can move to the next level like I did in 2017, where I started opening new credit cards for the airline and hotel point sign-up bonuses. Now this is where you might start getting into annual fees, so it's important when you get these credit cards, you pay the annual fee for the first year, you earn the bonus, and then you close the card before you have to pay the annual fee for the second year. So that means you're only holding the card open for 10 or 11 months. Now this is where I am right now, but I could take this even further. Number 4 is when you open a card, get the bonus, close it, and reopen it. Oftentimes you have to wait a year or 2 to get the same sign-up bonus on the same card over and over again. This is where the name churning comes from, but a lot of people apply that word churning to this whole gradient of reaping credit card bonus awards. Finally, the 5th one that some of the real hardcore people do is called manufactured spend. You open so many credit cards that you can't earn those sign-up bonuses without inventing new expenses. Now what I mean there is, remember how some of these cards say they'll give you $200 as long as you spend $1,000 in the first 3 months? If you're opening so many credit cards, your routine expenses that you just spend regularly aren't enough to meet those expense thresholds on all your credit cards. So you have to invent new expenses like buying thousands of dollars of gift cards with your credit card and then using those gift cards later or reselling them or something complicated like that. So I haven't reached that level yet. Now the last question you might have is, doesn't this trash your credit score? Check it out. Here's my credit score right now, 808. There's 6 main factors that influence your credit score. Your credit card usage, what's your utilization of your available credit, your payment history, any derogatory marks, the average age of your credit accounts, the total number of credit accounts, and the number of hard inquiries, the credit requests you've made in the past 2 years. The only really bad thing that this impacts is the number of hard inquiries on my score. As you can see, my score right now is red. This report is from creditkarma.com, a free service which analyzes and gives you a credit score. But you can also see the number of hard inquiries has a very low impact on your score. My score is mostly impacted by the utilization of my credit cards. I'm using a very low amount of my total available credit. In fact, having a lot of credit cards increases your maximum credit availability. So having a lot of credit cards actually helps you in this case. My payment history is perfect. I have no derogatory marks. Credit age can be slightly impacted by this hobby. Opening a lot of new cards may lower the average age of your credit score. Having a lot of credit cards that have only been open for 6 months or 1 year. But again, this is only medium impact, and it's outweighed by these other high impact things. And finally, having a high number of total credit accounts is actually good for your score. It's only a low impact. But I actually have 14 open credit card accounts and 6 closed credit card accounts right now. And my credit score is still above 800, so I couldn't wish for anything better. I hope you found this video helpful. Subscribe if you want to get notified when I come out with more videos on personal finance tips and tricks, investing tips and tricks, and tax tips and tricks.